Hello and welcome everyone to Silver Asset of the Day for the 14th of July 2020, presented by myself, Phil Carr, at the Gold and Silver Club. So as we head into a new week here, we have seen hedge funds and money managers yet again in the latest week. They've increased their overall net long positions with silver. We've also seen the gold-silver ratio break back down to 84-1, and with that, silver has propelled higher. We've in fact taken out $19 per ounce just last week, and we mentioned this previously, that if silver was able to hold and close above $18 per ounce, expect to revisit back towards the recent swing highs that we saw tested back in February. So well done to everybody who's been able to also capitalize on these breakouts on the metals, getting that big breakout move that we've seen with silver over a $1 move to the upside. Now, right now, silver is continuing to consolidate around $19 per ounce. Again, I would look at pullbacks as buy opportunities on this market. We do have the European Central Bank announcement later on in the week on Thursday, which does tend to be a big catalyst for some large moves here on the metals. So gold, silver and platinum usually do move quite significantly as a result of that. I would also keep an eye on the dollar index here as well. The dollar has been under some pressure in the latest weeks here, and with that we have seen gold and silver propel much higher. But I've noticed that the euro and the Australian dollar are building up some momentum right now, and with that we're seeing gold and silver priced in those currencies start to roll over. Normally as well, from mid-July onwards, we can see a bit of downward pressure on the metals. We may see profit taking, and as I mentioned before, don't FOMO in. So you really want to avoid buying at the highs. Those traders that bought silver last week and the highs there at $19.25 per ounce and so forth, they were then trapped with fairly significant move here lower, where we've seen over a 1% decline in silver prices. And it's always better to be patient, wait for those more optimal opportunities to then buy back lower on gold, silver. It's the same for platinum, where we've caught a 700-point move here for platinum by being patient, waiting for the price to get down towards the $800 per ounce level. Of course, platinum prices broke out to $890 per ounce last week, a trade setup that we identified with you previously. And I would watch out again for those intermarket correlations. So don't just track gold and silver price in US dollars, track them in other currencies as well, like the euro, the Australian dollar and the British pound. Keep an eye, of course, on the gold silver ratio. Be mindful that hedge funds and money managers, they continue to build their overall net long positions in both markets, but also avoid those bull traps, those FOMO entries. You're always better off waiting, being patient. You'll get much better trade opportunities by doing so. And this, of course, is where a technical analysis approach does not work right now. You need to use a lot more edge in the markets. You want to be trading like a hedge fund, like an institution, not trading like the majority of retail traders out there who are FOMOing in, and they are getting chopped up in the gold and silver market, as I'm sure you are aware of. And again, be mindful that on Thursday we have a major catalyst for the precious metal markets. That's going to be the European Central Bank announcement. Of course, if you would like to learn a research-driven approach to the markets where you will have an edge, do make sure you just click in the link below today's report to join our community of successful traders to become a member of the Gold and Silver Club. So with that, that's been Silver Asset of the Day. And of course, we wish you good trading.